accelerated, 3 pushes up to 62, but 6 bars in a row without a bear body. I think that's a risky short. I think we'll probably get 2 legs sideways to down. I'm happy going short, but I want to short below strong bears. Sometimes in trading ranges, this is what you get. You get just a flush up to the top. It's equivalent of having a single trend bar. You've heard me talk before about at the tops of trading ranges, a lot of times you'll get a bull spike, and at the bottom of trading ranges, you often get a bear spike. 32 is an example. The market tried to do it with 52, but there was more up. The move from 57 to 62 is a bull spike, and sometimes that's all you get with the trading range. I prefer a second entry. 64 is interesting. It's a strong outside down bar. I think it's an okay short below its low. And there was obviously some kind of news event. 65 looked like it might be flipping the market to always end down. It was erasing a lot of that spike up from 58, and then there was the tremendous sell-off on 66. So the market was clearly always in short at that point, and traders are going to be looking for reasons to sell. Short rallies is ideal. The bar is so big it could be a sell climax, and it could be setting up an expanding triangle. I did not short the breakout pullback below the 67 inside bar. 68, you have the decision: is this going to be an expanding triangle and a bounce up to the moving average, or is it setting up a low one short? Personally, after the big 66 bar, I was hoping to sell a rally closer to the moving average, but we didn't get it. The market just went down. Okay, another sell climax, 70, 71, and a strong bull reversal bar at 72. If you buy the final flag at 72, it's also at a trend channel line. If you buy above it, you're risking all the way to below it, which is a lot. So if you trade it, you trade small. 73 was good for the bulls because it allowed them to reduce their stop, use a tighter stop. But this is a potential bull trap where everyone sees it. It's so obvious that it's a possible 5-tick failure. So when I see situations like that, I look for reasons to buy at the high of 72 or below it rather than above it, just in case it turns into a 5-tick trap, which it did. I did not short below 74, and I did not short below 75 because we're starting to accumulate buying pressure. We have tails on 68, 2-bar reversal on 72, strong bull bars on 68, 72, and 74. And if we're starting to get strong bull bodies, that usually means that strong bulls are buying the lows, and it also means that the bears, the strong bears, are not shorting the lows. If the strong bears were shorting down there, they would not. These strong bull bars wouldn't appear. Strong bears wouldn't let the market get up there. If a strong bear is shorting at 24, he's going to short with enough volume so that the market's not going to go up to 27. So I'm assuming that the strong bears are only shorting rallies, and I'm assuming the strong bulls are buying new lows. And that's why I did not short below 75. I thought we were starting to form a trading range, and the strong bulls would buy and hold every new low, and the strong bears would only short rallies. 3 pushes down at 76, inside bar at 77, another low one short, and I wouldn't take it for the reasons that I just gave. 78, you got 3 little pushes down, 72, 6, and 8, but you have a bear body, and we're also going into the close, so I think that's a risky buy. And sold off into the close, but not enough for anyone to make a profit. Excuse me. Overall, I think a really interesting day. It had several reasonable trades today. Opened on its high, closed on its low. Yesterday I said that I thought the market would possibly 2 things. If it opened within yesterday's range, I thought it would trade below yesterday's low, and I also thought that no matter where it opened, it would close below today's open. It did close below today's open, but it did not go below yesterday's low. Now tomorrow, I think the odds are high that we're going to go below today's low. And the reason I talk about this is because we're up in a double top area, and the market should try to reverse. And the first sign of an attempt of a reversal is the market trading below the low of a prior bar. So that's why I think we're going to start doing that. Is this the absolute high of the trend? My guess is probably not. but it's possible that it is. It's possible it's a failed breakout above the early November high. It's just too early to tell yet. Weekly chart, trying to set up a second entry on the expanding triangle. Here's the first high back in January, and the second push-up was in April, and this will be the third push-up and the second entry. Monthly chart, a higher high, might be 3 pushes up. You got January as the first push, January 09, and then the second push was April of 10, and this would be the third push. As you know, I think that this is a bear rally, and that we're going to come down and test the 09 lows, but I don't know how long it'll take to get there. It might take 5 years to get there. I just don't know. Let me take a look at questions. What you see on the silver 5-minute and daily, the SLV, I got a lot of conversation yesterday on fast money. On the 5-minute, self-explanatory. Okay, it tried to form a base in here and broke out. So, this is a breakout, and it looks like it could gap down tomorrow and get some kind of a measured move down. So, the 5-minute chart at this point looks like it's in the middle of a breakout, not at the end of a breakout. But it's possible it could be consecutive sell climaxes, and it could reverse up. And here's the daily chart. Okay, you had a buy climax in early November, and you have a two-legged higher high and a huge outside down bar. So it looks to me like the market's trying to set up a trading range between 24 and 30. Do I know that the top of the trading range is in yet? I don't know, but it certainly looks. It certainly looks like there was aggressive selling today. People were dumping it like crazy. But it looks to me like if we haven't already established the top of the trading range, we're in the process of setting it up. And so the usual thing is that we'll work down here to the 24, 25 area, and then bounce, and then people will start seeing head and shoulders top. And most head and shoulders tops become wedge bull flags, and maybe this one will as well. I personally would not be shorting at the bottom of today. If it bounces, I could see buying puts, but I think we're in the process of setting up a trading range in here. Let me take a look at the weekly chart. Weekly chart, 1 bar final flag after a buy climax, and it could just kind of melt down for an extended period of time. So if this is how it looks on Friday, my guess is we'll start channeling down.